All right, guys, we are live. Um, Market opened a few minutes ago. I want to start by pulling up the daily chart. So, the last few weeks, we've been in this bull trend. It's managed to get above the moving average, and it's stayed above it. Now, the last this whole week has actually been a pullback in this trend up here. So, uh, you can see this starting back on Friday. We had a this bear bar is the Friday. Um, let's see. Actually, so that bear bar would actually this is bear bar is Thursday of last week. And then ever since then, every bar has had a high below the prior low, below the prior high. So each of these bars are basically lower than the previous bar, including uh, today and yesterday. So when I'm looking at this, really effectively we've been sideways since let's see what day that is, since the 11th. So for about 2 weeks we've effectively been sideways since this bar. Uh, right, it's been a trading range. So we've had moves up that reverse and moves down that are reversing. Like yesterday, where there was a big sell off that ended up um, getting buyers into the end of the day, which created this big tail on the bottom. So looking at today will probably be an inside bar. It'll probably be within the range of yesterday. So that means today will probably be a trading range day. Uh, Yesterday had a lot of selling, so there'll probably be some sort of follow through selling today. But we're also low in the trading range. We're near the moving average, so there's probably also going to be uh, some buying. So I think any sell offs would probably be bought. I don't think sell offs will be followed by more sell offs. Now let's say the day starts to go up some. Well, I think there's probably going to be sellers above yesterday's high. All right, we're in a trading range. We have had several days where the low is above, where the low is below the. Uh, so the high has been below the prior day's high on each of these bars. It's kind of been stair stepping down. Now, usually when that occurs, you start to get more and more sellers above bars. So I'm expecting there to be some sellers above yesterday's high if it gets up there. It kind of be similar to something like this, where every low is above the prior low, and it just keeps stair stepping up until here finally we go below yesterday's low. And um, I'm not sure on that day if the buyers were able to make money immediately and then it went lower more, but at least on the next day they were able to make their money here. So like if this was a 5 minute chart, then um, you know then effectively like within the 10 minutes, then you would have had your scalp out if you bought below there. So I think we could expect some sellers above this if it gets up there today. So looking at the 5 minute chart, E-mini has gapped up some, and when we have a gap on the open, kind of similar to yesterday, that means that increases the chance that today would be a trend day. Now yesterday, of course, ended up being a big trend day, and we were able to get um, we were able to get a couple shorts on the way down here. Today, even though we gapped up, the gap isn't that large, and you know we we're 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 within yesterday's range. It's not the final leg here, but we are within this area here, and we have targets below and targets above. So yesterday's high and yesterday's close. So we're between that. So uh, both bulls and bears have reasons to buy and sell. So I think we can expect a trading range to be occurring. And so we should only be trading it like a trading range until something else happens. I was wanting to show the news today. So these won't be very big, but you know, there's a couple announcements coming today at 9:45. Couple purchasing manager index events here. So these aren't usually purchasing manager index. So these aren't really market movers, but they are a red flag event. So it's best to just stay out and wait for a little bit. So market gapped up, and the first target to me would be the close of yesterday, and you can see we're pretty close to there now. So market will probably come down. It'll want to test that close, test the moving average, and then after that, it'll look at the 5,800. It'll look at the low of yesterday, or buyers might take over and it might come back up and look for the high of yesterday and the close of the day before that and 5,900. So we have this whole range between 5,800 and 5,900 that the market can play in, and I expect it to do that. I don't know. I could see us having some intraday trends, but then I would expect those trends to fail and then reverse. Go ahead and pull up the news here just to see what it shows. And we'll see if the market really reacts much here. Yeah, so we're about 40 seconds after the news, and there, no big spike yet. So that kind of news event isn't normally too important unless there's a big, unless those predictions are, way off. I think this move could easily reverse back up, but I think I would expect there to be sellers above this bar. So if this closes something like this, then I would expect that sellers would sell here and they'd sell more higher and trade it like a trading range. This is the crude oil chart. You can see yesterday was a trading range, and now we're higher up in that range. Gold, big gap up. It went above yesterday's high, and then failed, and then got a bear bar. So it looks like we had some sellers below that bear bar. I would expect gold to do something similar to like the E-mini today, where I think we can have some trends. We can have some strong legs, but then those legs probably won't have very good follow through. Soybean chart probably more lower after these two bars. The bulls will probably need some sort of double bottom closer to the moving average before they can get buyers. Yeah, on the soybean chart here, soybean gapped up above yesterday's high. Now, so now there's this big area here where there's no intraday trading. So this gap will probably be an important price to close, especially with it being at 1,000. So now soybean has both the gap to close and 1,000 at the same level. So I would expect there to be more sellers than buyers through this area, so the market can get to that target. So why would the market want to get down here to 1,000 and this gap? Well, they're just important areas on the chart, and what the market's always trying to do is it's always trying to find the fair price. So when you see it hang around in an area for a while, kind of like in here, that means it knows the fair price is basically in the middle of this range. But what it's going to do is it's constantly going to test lower until it can find buyers, and it's going to test higher until it can find sellers. And really, that's what the market is doing at all times. So my thoughts, like here, at this point on the open, the market thinks that the fair price is somewhere up here. So what it does is it rapidly buys here. So this is like the breakout period. Pulls back, and then instead of finding more sellers here, it found more buyers, and so it kind of reaffirms that the fair price is higher up. And then there's more buyers until we get up here, and now we've probably gone too far, so then it wants to pull back some to see if the fair price is lower, and then it goes higher, then lower, and so the fair price is somewhere in the middle of this, but it's always going to be constantly testing above and below to see if it can get that breakout. Yeah, so I think the soybean chart is going lower until it can get a better bottom, like a double bottom or a wedge back to the moving average. Hey, good morning, James. I think the plan today, we're going to live stream until 11 or 11:30, depending on how the chart looks, and then we'll kind of take like a lunch break, and then come back around 1, probably do like from 1 to 2:30. So we'll kind of break it up in that middle of the day. I'm gonna pull up the daily chart again. So James, what I was talking about at the start was really we've been in a trading range since October 11th. So really since this bull bar, we've been in this trading range for about 2 weeks now. You know, anytime the market tries to buy up, it finds sellers, and anytime it tries to sell off, like here or here, it there it finds buyers and it creates these tails on the bottom. So then with today opening within yesterday's range, I'm also expecting that today would stay within this range and that today would be more of a trading range. So um, so today will probably be a trading range. I think if it goes above yesterday's high, it'd probably be sellers above that. One, because each of these highs have been below the prior high. And when that happens, usually there'll be sellers above it. And then also, since we're in a trading range, probably once again sellers above because of a trading range. And the market, we're right in between two targets. So, you know, the market's here now. What's below is yesterday's low and 5,800. So the market would probably want to test yesterday's low at some point. Maybe not today. Although, you know, it might. There'd probably be buyers below that if it did. But there's yesterday's low, 5,800, kind of right at the same price. So that's an important area down here. Targets above yesterday's high. Then Wednesdays, or I keep thinking today's Friday. I keep misspeaking. Today is Thursday. So Wednesday's high is an important price, and then Tuesday's close is an important price. And then right above that is 5,900. So we have targets above and we have targets below. And really, I expect us to play this range, this 5,800 to 5,900, probably for the rest of the week, you know, today and tomorrow. So I think we can have big intraday swings, but I don't think the big swings would have follow through. So almost like this, you know, we have this strong sell off. You know, pretty much anytime you get a bull bar, anytime you get a bull bar, people were selling it. You know, bull bar at the moving average, it's got sold. Bull bar sold, and any bear bar, you know, just sell below it. So yesterday was a great bear trend, but then look, it didn't go into the close. It came around 2 o'clock and then reversed. So I would expect that we would have legs up and down, but they would not get much follow through. I was also talking about how there'd probably be sellers above this bear bar here. Now, if I was going to sell there, looking at the size of this range, I think going for 2 points would be okay. I think 5 points might be better because of the size of the range. But you know, selling there, then you have to trade small enough to, you know, be able to hold some sort of breakout. So that, you know, you'd have to have your stop basically up here. But I think selling there would be fine. I think sell again below a bear bar. So either you make money initially, or you sell again below a bear bar and then scale in. And I think really that's all today is going to want to do. I mean, it's just, you know, it has different targets to test, so it's just going to kind of work its way to those. You know, it came down. It didn't spend much time. It kind of came right down and tested yesterday's close. We have the 200 moving average above. We have 20 below. Then we have, like I said, we have the farther targets below and above. So I was thinking the soybean chart would be going lower. Let's pull that up. So after this big gap up, I was looking at these two bear bars. And with that, I thought we were going to have more lower until we get some sort of bottom. So at this point, I still think we're going lower until we either get a double bottom or some sort of wedge bottom. So like a three push pattern. So 1, 2, and then a third push that fails. And then I would stop selling. But with this, I think we're probably going lower or at least sideways until the moving average catches up. So whenever you get a gap up like this and then two bear bars, it's usually reasonable to short, and you don't buy back until you get some sort of credible bottom. I was tempted to just go ahead and just put a market order and just sell like one contract, just kind of blindly selling here, because my premise was that we were going to go lower. Gold chart, kind of the same story, right? I mean, big gap up, two bear bars on the open. This one had a tail, so it kind of reduces the chances, but you can see over here, yesterday's high, it went right above it and then failed. So I think that would have been a decent shot at a short as well. First bull bar probably won't be bought. There'll probably be sellers above the first bull bar. And once again, the market wants to find a credible bottom before the buyers will come in. This is the euro dollar chart. I don't have too much to comment on this chart yet for today. I'll pull up the daily chart. So the euro dollar has clearly been in a strong trend down here. Anytime you can draw, anytime something is this steep and you can just draw a line like that, the market, it'll break out above this like steep trend line here. And then the idea, usually how it works, it'll break out above and it won't really go higher. It won't usually go much higher until it comes back below this low. And then it'll find buyers. So if you get something this steep, usually there's a little bit more down. So you have to wait for a break of the trend line, a little bit more down, and then you can start to look for like swings up, for buys for a swing up. Yeah, I definitely foresee this being just a big range day. Now, like I said, I think the legs within it can be large. I mean, just look at this high of 57.50 down to 42.75. So, just in 4 bars, it's a 15 point range there. So the range is large. So it's a trading range, but we can still have large legs, and so got to make sure to trade small like that. Nasdaq breaking above on the 5-minute chart. Yeah, I think this looks more bullish than on the E-mini. I mean, to me, I could see this being a swing buy above this. There's somewhat of a credible bottom here. Couple legs down. You could argue double bottom there. So to me, this is looking more bullish than the E-mini. So I think it's a reasonable swing buy above that. My concern is that your target would have to be above these highs. But I don't think this bar is kind of collapsing now, but if it was going to close up here near its high, I don't think that'd be unreasonable to go for a swing buy there. We can see the difference in the Nasdaq and the mini. This 200 moving average, we would have been closing above that if it closed up here. Versus on the E-mini, if we were buying here, we'd have to be buying into the moving average instead of buying above it. And then I think the bottom on the Nasdaq chart here was, I think we had a better double bottom here. So soybeans still kind of working lower. So still no bottom on soybean. So what I want to see here for a bottom would be like one more leg down to the moving average. So then that'd be a 3 push pattern, a wedge down to the moving average. And then it'd be even better if you get some sort of double bottom as well for like a swing up. This is the daily chart of soybean. An issue with buying, we are at the 20 moving average on the daily chart. And like I was saying about tight trend lines like this, when you get something like this, normally once you break out above it, you have to pull back below it before the market will start heading up. No way, it's kind of like this larger move here. So trend line, and we've broken above it. Now the market is coming back and testing it here. So this could count as a test, but really it's better if the market goes below these lows. So I don't think like on a more weekly mindset, like a daily or a weekly mindset, I don't think soybean is a buy yet, because I think we still need to test lower. So depending on how someone managed a short scalp here, selling above this bear bar, 49.75. Let's say they had sold 5 points higher, they'd be selling here, and they would have gotten out break even on the first trade and with a 5 point profit on their second trade. So when you're doing limit order scalping, there's different ways to manage it. Like, I was thinking, if I was going to sell here, I'd rather wait for to sell below a bear bar, and I mean that's okay. Um, we didn't really have a credible bottom yet, so it probably would be okay to just sell like 5 points higher or above this high. So there's different ways to manage that trade, but the key is just to trade small enough so that you're comfortable with it, and that if like the breakout starts to happen above, then you're able to manage it, and the loss doesn't become too big for you. Another mistake that people make is the open will be a trading range, something like this, and then they'll go to that mindset of just scalping, buying below things, selling above things, and that's fine. But then the market will change. It'll transition to more of a trend, and so instead of them adjusting to that, they stay locked into that like trading range mindset of. So imagine yesterday, the first 6 bars were all sideways. And then we did have this breakout, but then look, there was bars. We had this tail on the bottom. We had bars below that. We had a leg up, but then sellers with the moving average. So at this point, you're still seeing a moving. You're still seeing a trading range. But then it breaks out, and we start to get trending price action. So then you have to adjust to that. You can't continue to do. You have to do what's working now. You can't do like what's been working. I think the market is trying to find a breakout here. It's like, we got this strong bull bar here. There'd be buyers above that, hoping that we break out and try to test these highs up here. I think it's a good mindset to have, is to try to be looking for these early breakouts that might happen. Maybe like buying above here or buying above this bar if it forms well, and then trying to swing up. Uh, my issue is I just expect so many. I just expect legs, like strong legs, to fail today. Like I don't think we will have a trend till the close of the day. So if I'm buying above this, I'm kind of hoping that we'll get like a 50-point move up to offset the times that I do lose the 9 points when I get stopped out below here. I think there's still going to be several reversals on the open. So I mean, I'm not too eager to be betting on a swing on this kind of open. If I'm going to be risking 9 or 10 points to buy above here, stop below here, um, I really need to profit like up here around 5,900, and I don't think we're going to be. I think it could. I think that it could do that today, but I think we'll be being stopped out so many times. We'll just be stopped out so often on a open like this. So looking at yesterday, what was one way you knew that something like this might happen? Well, there's several things that went into yesterday, and we talked about some of them in the stream. To me, the biggest thing about this sell-off here was this gap. So we have the low of this bar, and then this broke out, but the pullback never came back and touched this level. So when you see that, that is different from what this was doing. With this, anytime it went below something, it would at least pull back up and touch the breakout point. But here, we broke out, and people that bought here, they were unable to get out break even on that first entry. So that means that limit order scalpers that are buying below stuff are no longer making money. And that's different. That's a change in the market. And then, there's a lot of stuff to say about this sell-off. But once you see this gap, once you see like this low, and then none of these highs were able to get back above it, then you need to be thinking about that the market might be changing and that we can start looking for shorts. And ultimately, I dropped down to the 2000 tick chart and I took a swing trade. So your signal was this gap, the distance between this low and this high, like this gap was not closed. It's the same here as well. We have this low on this bar, broke out below, and then this pullback never came back and touched that. So that's a gap there as well. And you could say the same thing on the way up, like this high. So what led to this? Well, look at this gap. We have this high, broke out, and then this tail, and we never pulled back to that. And we just kept on moving up after that, which is different from something like this. Pretty much anything that would look like a breakout is being reversed, and there's overlap. So the soybean, it's getting closer to a credible bottom here. So you could possibly call this a double bottom, this low, and then one of these lows here, and possibly a wedge. So first push, second push, and then we have kind of a smaller third push here with the lows being higher than this. It's potentially, if there's a good bull close here, there's potentially a swing up above that. But I think I would rather wait for a better swing. I think I'd rather look for one more, the bears to fail a little bit more, closer to the moving average, and then look for buys up. But yeah, I hope you can see my reasoning with like these two bear bars. We probably have more down, and it'll probably go down until there's a credible bottom. NASDAQ is now in this tight trading range, just like the E-mini. This range we're in right now, it's gonna break out, and it's gonna at least double. Does it double to the downside or to the upside? I'm not sure yet. So I think there's some merit in the idea of trying to get a swing, because we are expecting this range to at least double. Kind of like yesterday, we started out with a fairly tight range, and then that range ends up expanding, and I think we'll probably expand down and up. So there's merit in trying to look for a swing trade. I don't think we have a great entry yet, though. Technically we're still on this long here, buying above that. And technically this is a short here, a low 1, low 2, so second entry short there, possible double top. It would kind of look similar to this swing short here. Double top at the moving average. You can go for like 10 times your risk or something. But I feel like with the open that we have, there's just going to be more play off of this range. So we're going to break out below, but then it's going to pull back above, or vice versa. So I'm not too eager to try to take one of those swings. Hey, good morning, John Doe. E-mini and the Nasdaq are in this trading range right now. We're we're expecting this range to we're expecting to break out of this range. You know, it's not going to stay like this all day. We'll probably have a decent move up or down. So as an example, let's just say it goes up from here. So we would expect a decent move up, but then I would expect that move to reverse back down, and then or you could do the opposite of that, and it would break out below, but then it would head back up. I think we'll have decent swings today, but I don't think they'll have the best follow through. I don't think it'll be like this. Or if it is, we would at least have a reversal like we did at the end of the day. So this is the most credible buy we've had. I think um, I think that's a reasonable swing buy. So I think that's reasonable if you go for 2 times your risk. And go for somewhere up here because we are expecting this range to double. So we have this low, failed to break below it, pulled back above that level, then failed to go below it again. So I think for those reasons, we're expecting this range to increase. So for those reasons, I think it's reasonable to go for a swing buy there. I think this is kind of the trouble, like what we were talking about, is until it really does break out, we're going to have a lot of these swing trades that do fail, which is why we were hesitant on like this buy or this sell. But of the trades we've had today, I think this is the best option for a swing. All right, so they would have gotten stopped out there. So market's still in this mode where it's just reversing these moves, but this breakout is going to happen soon. We're not going to stay like in this range for too much longer. least with here, with this buying, we were buying above the moving average, sort of like this. Like if you were to sell below this bar, at least you're selling below the moving average. So at least you have that on your side. Versus taking like a short here, selling below this bar if it closes well. Like the issue with that is you're selling to the moving average, so your odds are decreased a little bit. So got this outside bar. So the bull bar is inside of this bear bar. So market is looking for a breakout soon. I could see the market becoming clear later. Like I think we could have some good trades later, but right now it's just not clear enough what the markets wanted to do. It's going to break out, but we don't know which direction. And even if it does break out, it might reverse back to the other side pretty quickly. Yeah, I think this is a common theme, and like I was saying, there's definitely a lot of great trades you can take on the open, where you might have a swing trade up, and those are lower probability. You might have to take a couple losses before you get a win. But on today, because of I think we're expecting more of a trading range today, like big moves will have bad follow through, then it kind of hurts the odds of uh, your ability to profit off of these moves because it's typical for you to lose several times when you're trying to bet on a swing from the open. Like let's just say this, like um, let's say you sold below this bear bar, you would have gotten stopped out here. Bought above this, you would have gotten stopped out. You sold, so you would have lost twice before selling below this and being able to get this big swing down. So that's typical, but I think today we're expecting more of a trading range where the big legs have bad follow through. So like this is setting up to be possibly a good buy here. So I think once again I have to say I think that's a reasonable swing buy, but we're really hoping for at least two times your risk or more. Or like I said, like it'd be nice to try to go for like a 50-point trade, but I just don't think the moves today will have good enough follow through. So although I don't think that's a bad swing buy above that, I don't know. I mean, I'm just gonna sit on my hands and I think we easily could watch this break out and have a good move up here, but I think just a little bit too much uncertainty for me. It's always okay to wait. If you think you're seeing something but you're not sure, it's okay to wait. This bar had just a small tail on the bottom and it almost closed on its high. So a lot of buying during that bar. Gold's had a good sell off here. If it happens to come back up above,
Order submitted.
if it happens to get back up above this bar here, I'll go for a short scalp right there. If it doesn't on this bar, then I'm just gonna get cancel that. But if it does manage to get up here, I think that'd be good enough for at least a scalp. With us expecting a trading range day, it might not. I think it's probably logical that you could just buy the close of this bar, and either we break out immediately and you make money, or it pulls back and you'll have a chance to buy more lower. And since we're expecting a trading range day, you'd be able to buy more lower and it would pull back to at least get you out break even. So I think probably that's something that like a lot of funds might do. I think there's a chance that that's how they would trade that. You know, if they have plenty of capital that they can buy, and they're not worried about having to scale in and buy more lower. I do wish the market would get up to here. It looks like it's not going to, but I think that'd be a great short if it back above that. You know, 5 consecutive bear bars. We're now below the moving averages. Let me look at the tick chart for the mini. I really never pay attention to the tick chart when we're in a trading range because there's just not the setups that we're looking for. I was thinking maybe the tick chart after this big bull bar, we might have a something to look at here, but not yet. So 30 seconds in this bar left. Yeah, it looks like it's not going to be able to get up there in time. I'm not going to, I'm not going to move this down now and sell like above, like this bull bar.
Order canceled.
So I'm just going to go ahead and cancel that. I think you could argue that you could sell the close of this bull bar. After all this selling, first bull bar probably gets sold. You can see we have this gap blow on the this gold chart. So there's this high from a previous day, and then this gap, and that gap has not filled yet. So potentially, with today going above yesterday's high and failing, it might work down the whole day and get down here. Which means if we see the bulls make an attempt to go higher and fail, then we might be able to get short and get in lower. Technically we're still on this, so we're actually still on a swing buy here above this bull bar, and we're on a swing short below this bear bar. So both bulls and bears still have a reason to be in their trade. I'll be right back. All right, and I magically appear back in the little box there. So any bulls that did buy this close, they're gonna have an opportunity to make money today. So they buy this close. Let's say this breaks out lower here. They'll, uh, I think that'll increase the chance that there will be buyers above bull bars lower down here, because they'll buy here and they'll scale in lower. They're scaling 2 or 3 times buying above bull bars until we get some reversal like this. Crude oil is starting to get a little parabolic on this sell-off. So let me look to the left, see what kind of targets we might have. So basically I'm just drawing in this close and then that low. And we already closed that gap, so I'll take that off. It's kind of the same story with these potential swing buys. I think all these are reasonable, but on a normal day, I think they'd be okay to take. But the context is, your odds are a little bit lower. I think because the whole day we've been talking about, we should expect a lot of reversals today. So, you can take these buys or sells, but your odds are even lower than normal because we are expecting a lot of reversals. But, you could argue that there probably will be some trap bulls that bought here, and they'll be trapped out. But I can definitely see people that bought here. A lot of them, especially like the funds that bought, like they will hold on and just buy more lower, and they'll get out and they'll be fine. Which for us might mean that we might want to look for some buys down here, because we know that the backup will be coming. So people that bought here, they'll be buying more as well. So we kind of want to be buying along with them. When you're going to sell off like this, what you want to see is that this closes below these lows. So with 5 seconds left, it looks like it's going to do that. So that'll be good for the bears. Yeah, so there's really no reason to buy yet here. And you can see, what are we getting? We were talking about gaps earlier. This low and then this high, there's a gap. The gaps on this chart, it's more of body gaps, so that a lot of the tails overlap, but you can see that the bodies don't. So, you know, the low of this bull bar and the high of this bull bar don't overlap. And same here and here. And even here at this breakout point, the low of this bar, these bodies don't overlap, but these tails just barely do. But still, at least we're getting body gaps, so that is a sign of bearishness. You know, we've been talking a lot about like taking swings on the open, betting on the high or the low of the day. Like crude, for example, like if you had sold this below this bear bar, betting on double top, failed breakout above yesterday's high. Let's see. You know, this 2 times your risk, so you'd already be, you know, 6 or more times your risk down here. So that's the idea. I mean, you're going to lose a lot of them, but if you can really hold on and take the right ones and get the right amount of profit, then, you know, that'll work out well for you. So now the longs we've been stopped out, but technically we're still on this short here. So people that were bearish coming in today, if they sold below this first bar or below here, they'd be on this swing now. And then, you know, the bulls would have been stopped out a couple of times, but the bears would be on potentially what might be a good swing down here. You know, but I haven't changed my mind any about the idea of reversals today. Like, you know, scalpers will be able to buy here, make money, either initially, or they'll be able to scale and lower. You know, bulls, we'll watch bulls that bought here. They'll be able to scale and lower and make money. Yeah, so now crude's getting even more parabolic. Coming right down to 70. So, you know, that, you know, just 70, no other sense to it. No like 70.01 or anything. It's just came right down to 70. So that's an important number for oil. That's a big round number. I suspect as we start to get, now that we're starting to get parabolic, and now that we are getting near like this target here, this prior, I think that was the close from a couple days ago. I suspect that we'll start to get a bit overextended, and that we'll probably start to see some pullbacks here. I would not expect to see another bear bar that's even bigger going down. So let's look at what happened at the close of this bar. So we have the biggest bear bar of the day. That's coming late in the trend. You know, we've had maybe 20 bars down now. or maybe 15 bars down now. And we're getting the biggest bar late in the trend. And then look what happened. So this bar closed, then the next bar, it gapped up. So there are people that just hit buy the market at this close. So either sellers were getting out of their longs, or people that were interested in getting long at this price. So they just hit buy the market, and instead of the market opening at the same price or lower, it gapped up. So bears are not happy with this follow through. They could see that this is the biggest bear bar late in the trend, and that made them nervous. And now there's some confirmation that the bulls are buying through here. So I'm considering selling above this high here. The difference between this and this gold chart we were looking at, where I would have been selling above this high. This was a much more controlled sell-off. We were closer to the moving average. Whereas here, we're getting possibly a bit overextended. And I don't want a V-shaped recovery on this. So we're almost at 11 o'clock. Looking at 11 o'clock yesterday. So this is 11 o'clock yesterday, right here. So this is where we were at. And then this is 11 o'clock today. So really it looks pretty similar, just the way it's structured. We have a sort of a double top here, or a triple top. We have a sort of a triple top here. Multiple tests go lower and higher. Now, I'm not saying it's going to break out in a huge way like this. I am expecting us to have some big legs today, but I don't think those legs will have good follow through. So this market's definitely about to, might need a few more bars, but it's definitely about to break out and try to double or triple its range here pretty shortly. All right, guys, I'm gonna be off until 1. So I expect to be back at 1, and we'll get that live stream going for another hour and a half or so around 1 o'clock. All right, guys, see you then. I'll give people a couple minutes to come back in before I start dissecting and talking about what's happened and what's next. So something I did over the break was after these four bull bars, I was expecting there to be more up, and we got more up. At least a little bit more up. So what I did was I placed the limit order back to buy about right here, and I was originally going to go for 5 points, so it would have been out, or I would have already been out with the 5 points. Um, However, after this bear bar and after this second bear bar, I wimped out and I went ahead and got out here with a little, just a little bit of a profit. So I missed out on the 5 points. Um, so of course now looking at this, I wish I'd stayed in, but that's okay. That happens. But the reason I was buying through here was at, well, a couple things. One, when you see four bars like this, all decent size, all closing near their highs, consistent buying, there's gaps. You have this high and this low do not overlap, and this high and this low do not overlap. Um, there's likely to be more up after that. So this is nice, strong, consistent buying. We're going to get at least a little bit more up. So, this could be that little bit more up, or we could get even more up after that. The bears, they were moving down here, and then they got this deep pullback. Now here they had 6 bars down, so once again we can expect a little bit more down, and then here's a little bit more down. And then that got bought up, so the bears that were selling here, betting on more down, really kind of got trapped out, and that's what this is now. I think the bears also hit one of their targets, which would have been right here. So from this high to the low of this opening range, that measure move puts us down here, which they almost got to, and then they couldn't quite, and then the bulls took over. So they basically got to their target, and then the market just went bullish. Now, earlier today, I was talking about how today we'll have good swing trades, probably in both directions, but those strong legs that'll have like this or this, I was saying they probably won't have the best follow through. So like this sell off, this is a bear trend here, in hindsight, this was a trading range, and we were expecting a breakout in one direction. And then we started to get these lower highs, lower lows. And so now we can see that this is a bear trend. But instead of this trend continuing, we were expecting them to reverse, which is what happened. And now, as this market's going higher, it's looking like it could have more up, but I'm expecting the same thing where, it's probably not going to trend up the whole day. It's probably going to have a decent move up, and it's going to pull back. And it'll be interesting as we're kind of up against this 200 moving average, how the market reacts to it. So yeah, that's what we did over the break. We posted on the Discord So this is after the 4 bull bars. I put my limit order here, and I showed on the Discord I expect more up on the E-mini. So I bought there. I'm gonna go for 5 points. Like I said, kind of wimped out and didn't get the 5 points, but got a few ticks at least. A trade we took, another trade we took while we were on the break was this soybean trade. And really, it's the same exact type of trade that I was taking on the E-mini here. We had 4 strong bear bars. We're expecting a little bit more down, so what I did was I sold above that bear bar, and then just went for a scalp. And if you want to see the reasons why I did that, and if you want to see that trade live, that's on YouTube already, so you can go just watch the video on YouTube. So the bulls have had a good move up here. However, they're at risk of having a wedge. First push, second push, third push. No, we are still getting gaps, like this high and this low, this high and this low. There's a body gap here, this close, and then this close. Those bodies don't overlap. Then possibly we have another gap here with this high and this low. So if that stays open, well, that's a bullish sign that we could have more. But this wedge is starting to form, and that might be concerning for some bulls. Probably a lot will start getting out below bear bars once this wedge forms. I'll see if I want to look back. I want to see if we've had a day that might look kind of similar. We can compare it to. I mean, this day has had some similarities. Like we were having the sell-off that got bought. It never got back above the high. So like on this day, the first 2 bars were bear bars. We had a sell-off, and then we had a rally, but that rally never got back above the high, and it ended up just being more or less a trading range. So I'm not seeing any great examples of that. But this is looking more like the possible wedge I was talking about. It's a very clear wedge as well. Market's moving up, pulls back, goes higher, pulls back, goes higher again. And if we get a bear bar closing near its low, probably a good amount of bulls will go ahead and just get out below that. Because we are starting to get closer. We are starting to get higher up in the range. If this is the range, then we're starting to get higher up in the range. It's probably not. So probably bulls wouldn't get out below that. In fact, there's probably buyers below that. Because look at all these lows that are above the prior lows. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We've had 11 bars now where the low was above the low of the prior bar. So the first time a bar goes below, it'll probably get bought. And then this is a bad bear bar. So I'll go ahead and put a limit order in there.
Order submitted.
Now, if this ends up being a good bear bar, I will be getting out below that. Manny Too Smooth says, yo. Hello. Good afternoon, Manny. So it's possible this market could break out above. I'm still expecting there to be bad follow through on any strong move. I think it might be reasonable to buy later, but we wanted to get above the moving average and get above these highs of the day, and hold above that. Then we can start to look for setups like swing buys above that. The gold chart looks similar to the E-mini in the way that they've kind of had this tight channel. So it just went below the low of the prior bar here. The first time in maybe 9 bars. We were talking about earlier in the day, we were talking about this bar right here. So a strong bull bar closing near its high, following this. There's a couple candidates for double bottoms here, like this low and this low, or this low and this low. So strong looking bull bar after double bottom at the moving average. Like bulls that are buying here, I was pretty confident that they'd be able to buy more lower, and they'd be able to at least get at break even. So bull bar, they buy above a bull bar here, and then they get out break even there, which looks like that's what a lot of people did. So they bought the close, bought the first bull bar, and then got out break even. And then a lot of bulls got out there, and which contributed to this bearish move down. So maybe they bought here and bought here, or instead they would have bought lower. Maybe some bought above this, others above this, and so they would also had a chance to get out there. We'll see how this bar closes. If it's a bull body, I'll leave my limit order here. But if it's a bear body, I think I'll just get out or move it lower.
Order canceled.
So I'll go ahead and get rid of that. Even though it'd still be the first time in a long time that the first time we've gone below a prior low. I still want to you know, we have this possible wedge, possible double top, and a bare body, so I don't want to be buying below that. So this is that scalp trade I took on the E-mini. So E-mini had this really consistent rally here, you know, 15 or 20 bars up, and so bought on the pullback, and then just got out with a couple ticks of profit. I wanted to hold for 5 points, but I ended up just go ahead and getting out. Will buyers below this be able to make money? Yeah, probably. So just had a little spike in volatility there. So people with limit order buys below that bear bar, they're probably going for like a 2 point profit. And they're probably buying like 2 points lower or 5 points lower. So if they bought lower, they would have already been able to get out, break even on their first entry with a profit on the second. Soybean is trying to make a major trend reversal. So we had a bear trend. Then so bear channel down, we broke that trend line. And now I was trying to find a higher low here to be able to make a swing up. So third bear bar in a row, but big tail on the bottom, small body. So would I buy below this bear bar? Yeah, I think that'd be okay. Big tail at the moving average. I mean, who would want to be selling below that? So I think it's a reasonable buy. Would I sell above this bear bar here? Well, we have this wedge, which means the market should be reversing here to go down. However, if it doesn't, that would be a surprise, and then there might be a breakout above that. So I would avoid selling at above that high. Now I like how the moving average is right above it. I like how we're near the highs of the day. So those reasons help. But this wedge, the market should be turning down here for at least a little bit. And if it doesn't and it breaks out, that means it's a surprise, and surprises lead to breakouts. So I wouldn't want to be getting short above that. I'm interested in buying below this bar, but I don't want it to suddenly have a big bear bar right into the end, and then maybe buying. I don't want it to go down here in 1 minute, and then I'm suddenly buying at this after this big bear bar. I'd rather this go down earlier in the bar, so there's more time for it to reverse during the bar. If this bar closes something like this, we'll have 4 bear bars in a row. And that's different from what we've had. So through here, look at this breakout. It's bull bar closing near its high, big bull bar with gaps, versus looking at what we're getting now. We got tails on top, bear bodies, four in a row. So this is a weaker market than what this is. So that tells you there's more two-sided trading, there's going to be buying below is going to be less likely to work, and selling above is going to be more likely to work. Because selling above bars through here was awful. You would have lost a lot if you were trying to sell above here. But now we can see that selling above things is starting to make money. The euro dollar forex chart, it's been in this channel for a while now, and it's been getting gaps. So these highs then a breakout, and then this low. This low is not coming back and overlapping with those highs. And then we're kind of getting similar gaps through here. Just kind of flipping through the charts, seeing if anything pops out. I'm tempted, definitely tempted to buy below this bar. Looks like we're going to have a little bit of a trading range here for a few minutes. You know, look how much time we spent here at the start of the day. We were there for 2 hours in this range, and now we're getting back into this area. So the market's seeing it as like a fair price. We spent so much time here, so it should be okay to spend it again here. So it's possible we could be looking at a swing buy here. You know, this wedge should be breaking down and selling, but instead we're getting this bull bar. And this forex chart's starting to get a little bit parabolic. You know, we've been basically trending up since 11 o'clock. Now it's 1:30. and we're starting to get the biggest bull bars in the trend. So probably getting a little overbought on that. Daily chart of the mini. This is kind of what we were expecting it to look like when we're talking about it at the open. We're expecting it to be within yesterday's range, and we're expecting tails on top and bottom. So today's news was at 9:45, and it was fairly uneventful. There were no like volatility spikes because of that. Looking at tomorrow, same thing. Really no big events for tomorrow. So shouldn't expect news to have much of an impact tomorrow. So soybean looking for another breakout on the downside. What's good for them is that they have a double top here that is below this low. So we've not pulled back to the breakout point. So there's a gap there, which is bearish. I think we've had enough trading range price action in here, and we're going to be near the 1,000 price. That probably buy and blow here should be fine. Buy below, scale in a little bit lower. I think the only thing hurting this is that you do have this gap. So bulls that bought below here, they struggled to be able to make money over here because they didn't come back all the way to their first entry. This is the 15-minute chart of the E-mini. Sometimes it's fun to look at the 15-minute chart. It kind of gives you a different take on the same chart. And what's sticking out to me is we had 4 bull bars up on the 15-minute chart here. So I would expect there to be bars below that bar, which there were. So potentially that's another idea, is if you're getting a strong, consistent trend, we'll go to a higher time frame chart and then take a trade where you could possibly buy below it like that. we're forming a triangle. Something like this. So the first breakout of this will likely reverse back to the apex of the triangle before before continuing or reversing. So even if we break out here, it's probably going to pull back some. So I'm not too eager to just be hopping in and buying. So soybeans below the prior low over here now. So I expect bulls to be able to get a scalp. Soybean, I'm just going back looking how it reacts to the 200 moving average. You know, most times you can see it works out pretty well, like here, right here, right here. Here, the big trend down started at the moving average. Double top, tested it, moving average there. Ultimately, got below it and then stayed below it, leading to a trend. All right, so since we have this triangle, this is what I'll do.
Order submitted.
I have this triangle here, and if we break out of it now and come up here, it'll probably try to pull back some before heading higher. Plus, we'd be up around the 200 moving average, and just higher up generally in the range. So I think I'll go for 2 points on this scalp here. You know, if soybean gets down to the moving average, I might try to get a scalp on this as well. I think this is an okay swing buy above this bull bar, or this if this next one closes like this, that's okay. Buying above that. Yeah, put your stop below the bar. Go for something like that. But I would not be buying above that for a scalp. If I'm buying here, I only want to be going for at least 2 times my risk. So if we don't go above on this bar, then I'll just go ahead and cancel this order, because I wouldn't want to be buying above like a bull bar like this. So I wanted to go ahead and go above it on this bar. Looks like we probably will.
Order filled.
Right, so I'm just gonna go for 2 points here. I'll want to be probably fairly quick to manage this, because we want to avoid having to stay in for an upside breakout up here.
Target filled.
So went ahead and just got out there. I didn't like how that closed on its high like that. Like I said, we want this to happen fairly quickly. There was a potential for like an upside breakout to happen, and if we're needing to scale in for the trade to work, then I'd rather just not have to worry about having to manage it that closely. If this bull bar had closed with like a bigger tail on bottom, if we had more selling pressure here, I would have just kept it on, but I don't want to be trying to hold in when there's a possible like breakout of this high coming, because we want to remember we have this wedge, and this wedge should be sending us down more than it is, and if it doesn't, then that's a surprise. We might get a breakout above. So if we couldn't get that scalp there quickly, then I just wanted to go ahead and get out of it. Soybean sights in the 200. We'll see if I would have bought here, I would have tried for 2 points on this. So they should be able to get that. Okay, so if we would have held on, we would have gotten our 2 points. that's okay. I was fairly concerned about how that closed near its high. With scalping, with selling above stuff, most of the time you're gonna win. It's not hard to just sell above anything and buy below anything. It's the management that will really make the difference. So yeah, I mean anyone can put a stop orders. Anyone can just put limit orders below anything and sell above anything and make a lot of money. But then when it comes to the time when they manage it incorrectly, they're going to lose all that back and more. So it really comes down to managing these scalp trades correctly and avoiding like the big losses. So we have a spike and a channel here. These 4 bars up are the spike. And then the next piece in the market cycle is a channel. So spike is the first piece in the market cycle, a channel is the second, and then the third is the trading range. So, we have this strong breakout that eventually starts getting deeper and deeper pullbacks here. And people start selling above bars and making money instead of buying below bars. And so we can see, what's happening here is different than what was happening here. Here, only bulls were making money, and they could make money buying closes, buying above bars. Versus here now, they're making money selling above bars. They're making money selling bull closes. They're making money selling bear closes. They could sell here, then scaling higher up here. Now the bulls are starting to not make money. So they bought this close, they're down here and they'd be kind of scared. So we're transitioning into more of a trading range now. The 15-minute chart looks like a V. You can see this V shape. So trading range at the start, breakout below that failed. Now we're back above the moving average and trying to look for a double bottom or something to send the market higher. So I think like the level I would be looking at is right here. Right, we had these lows through here, broke out below, failed to go lower, then came back up above this support level. And now the bulls are hoping to get some sort of bottom so we can send the market higher and break out above. They'd like to try to test these highs of yesterday, and even better would be the close of the day before, or even 5,900. So just based on that thinking, some people will bet that this is a V bottom and we're going to be going higher and breaking out. And if that's the case, well, this bear bar will probably be bought. And kind of like this bear bar as well. And you can see the V shape on the 5-minute chart as well. So trading range, breakout below, breakout back above, and then if the market is going to break out, then we're probably as low as we're going to get now. So what some people might do is just buy this close, put a stop somewhere down here, and as long as the market doesn't show a clear top, they'll just hold long and let it break out above. But if it starts to show signs that the bulls are have no chance of going up, then they'll just get out, and they won't get stopped out down here. They'll just get out below a bear bar somewhere over here. So our two E-mini scalps today, we've done some scalps in other markets, but our two E-minis, we made 2 ticks here and then 1 tick there. Both opportunities would have worked if we held long, if we held in the position. But like I was saying, really it comes down to the management. Like long term, the profitability comes down to the management of the trade. Anyone can take the entries, but it's being risk averse enough to, and understanding when you're at risk of having a large loss, and to just go ahead and get out early and with a couple ticks or a couple ticks of a loss if necessary. I thought so the day's been in a trading range. Now at this point, looking back, we can see well, like we were saying, what was likely to happen, any strong moves would be reversed. Strong move here and here got reversed back, and now we're back into the trading range. So if this V bottom is correct, that means the market will be going up from here, and it's not really going to go any lower than what it is now, and it's going to at some point break out above this high and head up. So it could do that. It could have another leg down, but it's probably going to stay in the trading range, so a leg down would be bought down here, and then it would reverse back up, allowing people to buy here to be able to get out. So I think just logically, and in most circumstances today, you could buy here, and if you're willing to hold long for an hour and a half or more, then you could make money either by going straight up or by going down and buying more and getting out when it comes back up. My only concern now is that it is 2 o'clock, and 4 o'clock's only 2 hours away, and you might need a little bit more than 2 hours for that idea to play out. Where if you buy here, then you could buy more lower to get out break even, because you need all that time for it to go down and then come back up. And if you try to look at the symmetry here, we have, this is like the V bottom here. What did the market do before it was able to actually send it down? Well, here we were above the moving average, and then we had a couple closes below the moving average. Then we had one more push up, and then after that it went down. So looking at like these closes, comparing it to something like this, what do we need for it to go up? Well, we would need a couple closes below the moving average, and then for it to head up. So, potentially this could be that move below the moving average that fails, and then it'll head up. So yeah, I mean, the way I see this is either going to be a V bottom, and we're at our like very low here, and we're pretty much going to reverse up now and it go up, or this will just have another leg, kind of like this was up, but we'll have a leg like that down, and it'll really solidify today as being a trading range. And so what I'm looking at now, trying to figure out, is this going down or up? So at this point, it looks more likely it's going down. I'm looking at these lows here. So I'm looking at the gap that just formed here. So this low and then this high, we have this gap. I have the tick chart up now to see if there's a potential short entry here. The Nasdaq's been in even more of a trading range today. I mean, really, it's been very, very sideways today. A couple attempts of a breakout here, but just pulled right back into the range. E-mini had more of a sell off. So this is how the market looks right now on the daily chart. It's inside of yesterday's range. I think this is setting up tomorrow to be a day that will want to test the low of today and the high. So we're inside of yesterday's range. Probably tomorrow we'll want to go outside of the range on both directions. So I think tomorrow will probably probably have a bit bigger range than today does. And we can probably, like with today being this bear bar, if it closes something like this, there's probably going to be sellers above it because of this tight channel we've had down. But there's also probably buyers below because of these tails we've had on bottom. So we'll probably have bigger legs up and down to get above this high or get below this low. Manny says the stream is fire. Yeah, I definitely agree. I need to put like one of those little TikTok videos in the corner down here so people can like watch that while they're waiting for something to happen. Something that you can do for practice on the really any chart, but I like to do this on the 2000 tick chart is just drawing like support and resistance lines. You can see here resistance, then broke through, acted as support a couple times, support, 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 and then broke through. Now it's come up to again. And usually when you see something like this, once it, let's say, breaks out and it goes over here and does something different for a while, then maybe the next day or later in the day, it'll come back and then it'll act similarly again at this level. So like if this breaks down to the downside, but then comes back up a few hours later, then you'll have a similar type reaction to this line like you would here and then here. So if I'm watching the 2000 tick chart closely that day, then I'll be doing this. This is also how you can trade the 2000 tick chart on days where it's not really trending. Because on trading range days, you'll have more price action looks like this, where you have these levels that keep on getting tested over and over again. gold has this potential swing by here. So let's look at what's going on with this. Got a strong move down in the open, pulled back. So we have this trend line here, broke through it, came down, tried to go lower a couple times, failed, and now the trend is working up. So we're starting to get higher lows and higher highs. So when I see that, and then I get a bull bar or two near the moving average, and that's potential for a swing buy above that. So I will go ahead and put an order to buy above
Order
that.
submitted.
I needed to get above it on this bar though, so it has 1 minute to get above it.
Order filled.
All right. And I'll put my stop one tick below. I'm going to draw in 2 times my risk. Puts us farther up there. So looking at our risk reward ratio, it's 2 to 1. So just based on that math, we can tell we're going to lose the majority of the time. But when we win, we're going to have a profit that will offset our loss. So we got a bull bar for a follow through, so that's good for the bulls. So I'm not going to manage the trade anything yet. This is just kind of what we want to see. Just like this bull bar is a buy, I mean this also would be a buy above that bull bar. Peek back at the E-mini for a little bit. Not too much. So if you watch my moving average video, the magic moving average, I think this is one of those trades that I point out a lot in there. We've been getting higher lows for a while now, and we have a target above, which is the open of the day, and we're sticking above the moving average, starting to get bull bars. Looks like we're starting to kind of develop some strength is starting to like pile up through here. So I think it's reasonable to bet on a breakout and try to swing up. So, I mean, of course, I want it to go up faster, but there's nothing inherently wrong with what's happened yet. Really, the market needs to get up one more tick above this bull bar, and then we'll see how it reacts above that. So with a bear bar like this, it's it's close. I think it's a close decision. I think I'll leave it on a little bit here. When it was going to close lower, I was going to get out below that, but bulls were able to buy into the close and create a little tail on the bottom. So um, I'll give it a little bit more time before moving my stop up. But if it had closed on its near its low like it was looking, then I was just going to get out below it. I mean, one way to trade is to basically, if you're buying and then you get a bear bar, one way to trade basically is just to get out below like any bear bar, closing below its midpoint like that. One, if the market is going to go down, you'll be stopped out with a small loss. Two, if the market's going to go up, it often won't go below that bear bar. So, if you put your stop below it, some of the times it'll go up without you getting stopped out. So if it does go below the bear bar and ends up continuing up, then you'll have more opportunity. You have opportunities to buy again. So now that we've gone above this high, what we want to see is this bull bar to close above these highs here. If it closes above these highs, that means it should be decently strong. But if it closes, somewhere down here, that means that this breakout is weaker and it less likely to play out. You can see we're starting to get a little bit more volatility now that it's trying to break out of this area. Gonna peek over the E-mini for a second. We're at 2750 as well on the gold chart. So if it can close above that 2750, that'd be really important for the bulls. But if it closes something like this, it once again it makes that decision. I think basically if it closes below its midpoint, I'll just get out of it. But if it closes above these highs here, then I will keep it on. So I think the fact that it hasn't gone straight up yet means that there are not many bears trapped. The bears are not terrified of it going above this level, and they're just buying back their shorts. And there's not too many bulls really all that eager to be buying here, or else it would have, if those two were the case, it would have just gone straight up. So since it closed below those highs there, it's probably not going much higher.
Order filled.
Yeah, I'll just get out of that with I really wanted it to close above these highs, and since it didn't, what we want to see is bars like this, where the bulls are really excited to buy and the bears are trapped into these bad trades and they have to get out. With it being later in the day, there's not too much time left for these bars to play out. So so we bought above this bar. We did get a good follow through bar here, but then we got a bear bar and then a bull bar closing that broke out above these highs, but it closed below it. Probably it's not the best breakout. So all right, I think that's all we have for the stream today. This was our afternoon stream, and we kind of did a few different scalps. Didn't get any real big trades. The E-mini today was kind of fairly choppy. Didn't quite have the good setups we would have wanted. But yeah, we're gonna have a stream again tomorrow as well, so check in then. And